to my morning report chart of appraisals on Wednesday the 10th of January with me, Richard Perry, market analyst at Hantec Markets. We've had an incredible run higher on the yen, and that continues to affect the markets, certainly on the forex side anyway. Let me just show you the board, which continues to show dollar yen falling away back below 112 big figure. That was a support throughout December. That's now been breached. You've also got euro yen falling sharply, and also sterling yen as well, because we've got sterling which is underperforming the dollar as well. Now, what we have seen is this: the dollar rebounded towards that resistance of the neckline of the head and shoulders top pattern. Seems to be sort of stalling a touch now, doesn't it? 92.50 towards 92.75 resistance band, just falling over a touch today. As the euro has just sort of started to sort of regain a little bit of ground. You can see that the Bund yield spread underneath treasuries has started to pick up. That has helped to support the euro dollar chart there. And interesting that we've seen the big breakout on treasury yields to a 9-month high on the 10-year, to the highest since March. And that has basically been driven by JGBs, really. JGBs on the Japanese government bond yields. If I get to the chart, you can see it. JGBs have been pushing strongly higher in recent days, and that has helped to sort of drag treasuries higher, treasury yields higher as well. You can see here that the JGBs on the 10-year side have been up to 0.085%, and that is towards the top of the band that it's basically been trading in. A little bit of room possibly towards 0.1%, but still a big strong move to the upside, and again the highest on that since July. So strong moves that we've seen, which have helped to drive the market higher. Now, interesting that we've seen equities just starting to consolidate a touch in the last sort of day or so, just beginning to consolidate, and that's despite the fact that the S&P 500 continues to pull all-time highs. Just a little bit of an air of caution starting to creep into the markets, and that's sort of reflected in the DAX falling back a bit today. DAX broke out at the beginning of this week. Can it hold that breakout? That would be the big question. But these equity markets across the European session are sort of mildly consolidating. So the dollar has, as I said, just dropped back a touch, and that's helping to support gold today, which had been looking corrective, but certainly has rebounded. Silver is my chart of the day, and there's some interesting technical developments on silver today. So what about the economic data today? We've had some strong numbers, or some positive numbers certainly, out from the UK in terms of industrial production and trade balance, both beating or coming in ahead of expectations, certainly on not on the reading here, but on the ONS numbers that get reported. They beat expectations on the trade balance, so that's a positive. The industrial production also better than expected on the year-on-year data, 2.5% up from 1.8 expected. So that was a positive there. So some decent numbers, and this should help to support sterling to an extent, although we haven't really seen a reaction yet on cable. But yeah, that's to sort of maybe later on today. Now we've got also the EIA oil inventories. We had the API oil inventories showing a sharp decline or a sharp drawdown in the crude stocks. Weekly crude stocks on the EIA are expected to be in drawdown by 3.8 million barrels. And that's expected to certainly drive a bit of volatility this afternoon, so watch out for that at 3:30. But much beyond that, that's pretty much it. Now my chart today is silver. Silver has broken this uptrend following on from a couple of days of negative candles, sort of rolling over underneath the support at 16.95, which arguably sort of topped the market out a touch on the near-term basis. But it hasn't yet really been confirmed as a breakdown, because 1680 has been a consistent pivot really on silver over recent over the last sort of year, and it'll be interesting to see if 1680 holds, because that is a basis of support now. Rallies from 1686 today to back above 17 big figure, but this is a level now, because basically you got the resistance at 1730, which sort of hit the highs last week and formed the basis of the corrective move that we've seen since then, and now 1680 is the key move to the downside. If that gets broken, certainly on a closing basis, I think that would suggest the market is starting to correct back. You've got the momentum indicators which have rolled over again. Now 70 on the RSI seems to be a basis of resistance for silver. Every time we get, or every time basically in the last year or so since the market has been trading in this broad range, sort of 1560 towards 1865 area, sort of every time that 70 has been hit on the RSI, the market has just rolled over again and turned corrective. So it is interesting that 70 got hit the other day and rolled over. So it is suggesting that the market is a little bit more corrective near term, but I think 1680 is the level to watch there. Now you've got this little top pattern, as I said, on the hourly chart. You've got momentum indicators which are more correctively configured. Look at that those hourly MACD lines. Now if the RSI on this little rebound starts to roll over again under 60, again that would suggest, I think, that the market coming under a bit of pressure to sell into strength. You've got this sort of run of lower highs, which arguably, certainly the first one has been sort of taken out at 1704, but resistance around 1715, which was yesterday's high. If you sort of maintain yesterday's high as a resistance, then finding a resistance underneath there in the hourly RSI under 60, then that would again suggest that sort of the rallies are being sold into still. So this is an important rally to see what happens here. If the market fails, then I think it could come under pressure to the downside again around 1680. So with that in mind, I wish you good luck in your trading today, and I will speak to you later. Thank you.